As a realtor in the Dallas-Fort Worth area of Texas, I often have clients who are not currently eligible for a traditional loan, and they ask me to find them rent-to-own properties or seller finance properties to help them out of their predicament. So this video is for those who have either lack of documents for their identity, for their work permit, for their immigration status, or for their income, so lack of documents, or they might have had a situation which affected their credit and currently they do not qualify for a loan due to a lower credit score, or their debt to income is too high to qualify them for the type of the loan that they want. So this is the audience for this video. If you are one of those people, continue to watch because we're going to take a look at how we can get you into a house regardless of the circumstances. Okay, so my name is Elena Garrett and I'm a realtor in the Dallas-Fort Worth area of Texas. And I specialize in what's called creative financing. And creative financing is typically referred to things like rent-to-own, seller financing, mortgage wraps, subject to an existing loans, and all types of combinations of those four scenarios. How could I help you to find a property that you could buy? In the situations where we're dealing with either lack of credit or high debt to income or lack of documentation, it is obvious that it will take you some time to resolve those problems. As a result, my recommendation is to look into the following four options for yourself. Option number one is rent to own. Rent to own is good for people who have a temporary slowdown in their life. So, for example, let's just say that for whatever reason you had to file for a bankruptcy in the last 2 years, or if your tax returns were not really showing that much income last year, but this year they're much better, but your lender is asking you to wait for another year in order to either clean up your credit, pay off some of your credit cards, or to get that bankruptcy or that foreclosure off your record. In those cases, you have a temporary hold, a temporary impediment. Rent to own is really good in those situations because it allows you to get into a property at today's prices without waiting for the property to go up in value again like they do every year. And then secure that property, start living in that property, move to that property, start settling into the school zone, school district, start getting your kids, familiar with the area while you're fixing the items that the lender is considering to be an impediment. So for rent to own, if that's something that could help you, so the rent to own works in a way that you rent for up to 2 years, and then you have an option to purchase the house. Nobody can sell the house from under you to another buyer until you formally declare that you are not interested in purchasing the house. So the house is being basically held hostage until your rent runs out. And by the time your rent runs out, you either need to free up your credit and clean up your credit, or you need to abandon the transaction. That's how rent to own works. None of your payments typically go toward the down payment. None of your payments go toward your pay down of your mortgage, total mortgage amount. Basically, what rent to own is renting, pure renting, with an option to purchase at a later date, later up to 2 to 3 years later. That's rent to own, and that helps those people who have a temporary hiccup with their ability to secure a mortgage sufficient to purchase that property. Now, that aside, for those of you who have not a temporary but a permanent issue, so for example, your issue could be number one, you do not want to declare your full income, and that's understandable. Maybe most of your transactions are cash. Maybe you're just taking a huge number of write-offs. It doesn't matter. But what we do know is that for whatever reason, you do not want to declare or to show your full income because you want to lower your taxes. So that's number one. Number two is absence of immigration status. So if your immigration status does not allow you to have a work permit or other documents needed for a loan, that is a pretty permanent problem. and there is no clear visibility and at what time that problem would be resolved. So it's number two. And number three are things like, again, typically have to do with immigration or typically have to do with Social Security, ITIN, all kind of other things that are not temporary, but more or less permanent, and you have to work around them. For those situations, we have a 2 to 3 ways we could deal with that. Rent to own is probably not a good option unless the seller is willing to finance your property and do seller financing at the end of your rent to own period. So what's left is truly if seller financing for those owners who own their property free and clear. Mortgage wrap for those owners who maybe have a current mortgage on a property and they want to sell or finance you part of your large part of their equity. I could go into further details in a different video, but I'm just kind of trying to do a quick overview. So mortgage wrap is a separate way of seller financing where there's an underlying mortgage underneath. The owners do not own the property free and clear. So that's mortgage wrap. And then there is a possibility of subject to an existing loan. I have multiple videos on subject to an existing loan properties in the Dallas-Fort Worth area of Texas. Feel free to review. I'm going to put the links in the description of this video. But basically what you're going to do is you're going to find properties that the sellers for some reason cannot sell at this moment, and you offer to take over the payment of their current existing loan. Often those are pre-foreclosures or people who are struggling to pay their mortgage on time, or in different types of situation in which the owner is willing to walk away from the property with giving you the key and legally letting you to take over their mortgage payments. So in all of those scenarios, there are 3 scenarios, and none of them is ideal. Seller financing typically requires a huge down payment. When I say huge, I mean like 15 to 20%. So if you're looking at a traditional $300,000 house, then 20% of $300,000 is $60,000, and that's not counting the closing costs and other purchase costs, which could end up giving you the need to come up with about $70,000 to $80,000 at the closing date. So that's the drawback of seller financing. Now, there are options of finding sellers who are willing to take much lower down payment in return for a larger interest rate. But again, you are kind of paying it up front or paying it later. Typically, you don't get both. You don't get both a great interest rate and a low down payment, not with seller financing. Now, for those of you who the seller financing only helps people who have 60 to 100,000 K sitting around waiting to be used. For those of you who do not have that kind of funds, you have to go with either a mortgage wrap or subject to an existing loan. Now, both of those processes are really good creative financing strategies that are used by investors to purchase real estate. But because they're kind of investor oriented, they come with their own challenges that you would need to overcome or you would need to be aware of. And when we sit down to talk and when we sit down to discuss what your needs are and what your capabilities are, I'm going to go over all of the pluses and minuses of each individual methodology of purchasing the house. But the biggest drawback is that if you're doing mortgage wrap or subject to an existing loan, there is a possibility of the lender finding out that you're in working with the seller, going around the rules of the bank, and then them calling the loan due, which means them requesting to pay the entire price of the house at once, and then you having to sell the house literally at the snap of your fingers in order to avoid a lawsuit or in order to avoid a foreclosure from their current lender. That's a big drawback of both mortgage wrap and subject to existing loan type of situations. There are ways to reduce the risk of the lender ever finding out that you are doing this kind of arrangements with the seller, but nothing is 100%. So there are pluses to those methods, and of course there are going to be drawbacks. That is it for now. If you are interested in learning more about these strategies, either rent to own, subject to an existing loan, mortgage wrap, or seller financing, I happen to specialize in all of those areas, and I have done multiple transactions with those types of financing. So I know the paperwork, I know the approach, and I know the risks, and I know how to calculate approximately what your financials are going to look like. If you're interested in finding out more, contact me. My contact information is below. So the next step for you really is to decide if you want to work with me. Look up information about me, watch more of my videos so you can be more certain that we would be a good fit for one another. Then reach out to me either by email or by phone. We're going to sit down. I like face-to-face communications. I don't necessarily like phone communications as much because I need to make sure that you understand the nuances of the process and how they're going to help you, but potentially how they are going to be dangerous. So I know that you have full understanding of the process. And then once I know that you have a full understanding, we clarify your down payment, we clarify your cash to close capabilities, and then we start with the research of the properties that would fit your down payment and monthly payment capabilities. That's it for now. My name is Elena Garrett, and I'm a realtor in the Fort Worth area of Texas. If you are interested in contacting me, my contact information is below, and I work with Keller Williams Central in Richardson. So if you're way, way, way far away, we might have to do everything by phone. All right, thank you for joining me today, and I will see you guys at the next video.